The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman. This is the Wednesday edition. This is March the 19th. And my pleasure to be here Monday through Friday, market days. And 11 o'clock till noon, of course. And at 877-927-6648. That's the number to call. Love to hear from you. Thank you, Steve, for 2 great hours. And this is today, Wednesday. So straight after me, we'll have Larry Pesavento, except I'll be doing Larry's show today. And even more important than that, don't forget, you've got something coming up around here, and that's going to be very important to me. And I'm looking forward to it in the sense that it isn't very often that I do these webinars. And right there, I'm putting it right there. Front page of TFNN. Get the opening call. It's my daily newsletter, free for a month as a trial. Instead of 2 weeks, it'll be 1 month. And you'll get my free webinar because only subscribers can come to my webinar tomorrow night, 6:30 to 7:30 Eastern Time on the MACD and the slow stochastic. I've spent a lot of time on this. I've refined it. I'm going to spend the first part of it giving you all the technicals about the MACD and the slow stochastic, and then I don't know if I have the patience to go through it without slapping on a couple of live ones that we look at, but I will then go to all the ones that are pertinent. Why, where, how, what the fast-moving average. And remember, I like to call that quicker moving average of the MACD, which is really the MACD differential line. I like to call it a fast-moving average. It is a moving average in the end, and it is also it's really got a vertical aspect to it, but it is also looking at a shorter movement than the slow-moving average. So technically, I'll go into what it is technically, why I call it what I call it. The reason being, it just makes it so much simpler to identify and to move with the flow. Just a whole bunch of things about the MACD and then the slow stochastic, what levels I like to look at, why at a period just like this, it is so important looking at the weekly and monthly charts, how the next week, just over a week of trading, about 10 sessions or so of trading, how that is going to impact a lot of the outlook going into the summer, certainly into the spring-summer period. Why? Because there are levels that if we start to take out on the downside, it means one thing. There are levels on the upside that if we start to take out, it means something completely different. In fact, what it does is it changes the perspective of consolidations, and it makes it even more Fed influenced. So we'll be talking about that, of course, today. The Fed, we've got Yellen talking later today. I'm not sure she's going to affect much, although other times she's had a huge impact where the markets soared the only 2 times she's spoken before. Okay, so go to the front page of TFNN. There's still plenty of time to sign up. You sign up today, you start getting my newsletter tomorrow, and you'll be ready to come to my subscriber-only webinar on the MACD and the slow stochastic. And these are aspects that I can go into when I have that kind of time specifically focused on it. When we're looking at the E-mini, the S&P June E-mini, it's made a peak D at 1867.50, double top so far for the day. The MACD starting to that fast-moving average. The MACD line is starting to pull back and is almost, let me just see if it's crossing yet. Well, the bar hasn't finished. Yeah. Look at this. You've got 4.51 for the green and 4.47. Within 8.08 of crossing negative. And so far it's holding the 9-period moving average. That's even more important. And what we're looking at, see the divergence here? I'm going to talk about that. You see how the E-mini went from 1867.00 on the 18th at 4 o'clock to the high of the 19th, that's today, at 6 in the morning, and it went to 1867.50 to make that leg D and turned it into a peak D with a doji candle. But you've not yet broken down. The only way you start to break down is if you take out decisively left side trough. And in this case, that's 1861.25. So 1863 to 1861, going to be very important. A couple of other things that I'll be talking about, and I'll go into in greater detail. We'll be doing Larry's show today, so I'll probably spend more time on the currencies and on the both the currencies and and the beak formation of the daily chart having made a peak F-top. I have to tell you something. I do not know of another technique that has the veracity, that has the consistency, even though I personally might not trade it correctly, or I might not identify it until later. The Chapman wave methodology has just gone, I mean, this is going on for since really officially it was 1984, the summer of 84, that I really defined the fact that peaks could go higher than D and go to E and an F. Well, let me put it this way. It was, most of my work was working with the peak D. And then I spent a couple of years refining. It was in 87, just before the crash, that I noticed that there was a chance that it could go high. And thank goodness, because the closing price chart of the Dow in August of 1987 went to a D, and I said, there's still strength based on the chart formations. I didn't use MACD and stochastic, just use different chart formations. And I said, I think you can go to a little higher. Let's give it one more day, and it went to an E, and then I got my sell signal. So here, the gold contract has gone straight up to 1392.20. This is the June gold. And then it's plunged in that Eiffel Tower look that goes straight up, straight down. Why? Look how quickly the stochastic failed. Look how the MACD made an M pattern and didn't get as high in the second round when it went to F. And look, that 200 period exponential moving average at 1338, that is in fact the low. So far, it's gone straight down from 1392 to 1388. Doesn't sound 1338. I'm sorry, doesn't sound like much, but believe me, it's a lot, because all the gold has done for quite some time has gone up. The only time it had that kind of pullback was way back December of last year. And since then, it's not had a correction, anything close to this. We were on air Thursday and Friday when I identified that there could be a leg F, and that could turn into a top. And the 120-minute chart made that peak D. And look at the technicals here. We're fading badly at the D, and now it's plunged through the 200-period exponential moving average. Let's run the numbers. The Dow is up 11 at 16,347. The S&P is up at half a point at 1872.80. The comp index is now, I believe, the comp index is down 4 at 43.28. Gold is down 18. I have it down 20. I'm a little behind. So it's bounced a tad. Down 18 at 13.40. Silver's down 16 cents at 20.69. Crude oil is up 29 cents at 99.99. Bonds are down 3 seconds at 132 and 28 seconds. The dollar is up 8 ticks at 79.63. And the euro is up just a tad at 0.003, at 1.66. Hasn't yet been able to take out EU or USD. Has not been able to take out the peak E high that was made 7 days ago. 5 days ago at 1.39660. It's in this trading range. And I have to tell you something. This is fascinating. Look how beautifully it's making that symmetric triangle. And very often, what you will see in this particular triangle, if there is strength, it'll take it out and it'll test the left side high. In this case, 1.3946, the high of the 17th. And if it does that, there's a good chance it'll just get towards just under or just over the previous high of 1.3966, then come back and make a rectangle formation. But if it takes out the downside, 1.388, then 1.385 will be beckoning, and that's going to be a really important support. So a couple of things I wanted to do here is I wanted to talk a little bit about a couple of stocks. The first one is going to be BRK.B. Now, I don't know if I did this for my subscribers or I did it on here as well, because I've been preparing for this webinar. It's only an hour, but believe me, I'm going to be packing. Because it's archived and you're going to be able to go through these charts over and over, I'm just feeding as much information there as possible. I want it to be like a fine painting when you go to the museum, or a fine bit of music, that every time you listen to it, you find something else in it. And that's what I want the webinar to be. I want you to keep going back and say, oh, that's applicable now. I forgot about that. And that's the way I wanted it to be. So I'm packing it in, and then towards the last part of the webinar, I'll be going through live charts. One of the reasons being, you will then be a subscriber of mine, and I will follow these things up, as I always do, every single day, talking about the MACD, talking about the slow stochastic, showing this chart, teaching as I show the chart. Where's the 9-period moving average support at 16,281 on the Dow? Where does it start to break? The fighting two patterns. One is the falling axe, and it's already above that, only because it's moving sideways, not because it's breaking out. Remember, I like to say 2 out of 3. I prefer 3 out of 4 in a big move to come in the falling axe method, with that downtrend line, the top downtrend line of the expanding wedge formation, sees a push towards the upside, because I've got this as 2 fighting patterns. One is there's the arch formation, and the MACD is just now trying to turn up. I'm just going to check MACD 5641 and 65. The MACD average 65. Oh yeah, that's right. So the slow moving average is still above the faster moving average, or the MACD line itself. So, and the slow stochastic, nice beta, nice expansion, goes with the price movement, but it's still only at 37%. So either this is going to be a spectacular move. They're going to break out and double the low from 16,046 to the high of 16,369. That's 320 points. And that would be from, I usually take it from the bottom of the previous candle. So 300 takes you to 16,610-ish or something like that. Breaks out to all-time highs. Or we're going to make the arch formation and start to fail. I'll go through a lot more things as we come up to the next segment. And most importantly, in the next segment, what I want you to do is look at Berkshire Hathaway, the B stock, trading at 123.58, up 30 cents. What does this mean? Is this a breakout? Is this a really important stock in an important part of the market? I'll talk about that when I get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Dow's only up 3, S&P's down a tad. A couple of things that I want you to know. I'm looking at Berkshire Hathaway. The question in the den was, for those people who really know the Chapman wave methodology, is there another count? Well, for the daily, there is absolutely no other count because the previous low bar that started a buy signal that actually went to a D, it even went to an E at 118.66, started on the 8th of November at 1350. So if you take that out, then you're looking at, and in fact, this is a perfect example. Oh, I must make a note for my next Master Trader series. Give me 1 second. Where's my book? Perfect flat base restart. Flat base restart BRK. This is the daily BRK daily, and that is right there on the 11/8/13. Correct. 11/8/13. Oh, okay, we're back. And now what happened was, if you take that out, it's a fresh start completely, except in a rare instance, and it would have been if the low of 113.50 of the 8th of November, which went to a D, but every time it kept coming back right to that, almost to the 113 area. Finally, these things very often go to a D, but then they even go to an E, and the E is where it comes back down and then takes out the left side bar. But if this bar right here, 113.50 exactly, went to 113.49, can't be too far, but if it went just real close, took it out, I would still say that if the MACD is strong with that very small beta between the two lines, allowed it to shoot up to a higher high above the peak D, of the 9th at 117.46, went to 118.66. When it came back down and held 113.60, I would have said, and then bounced, I would have said, uh-oh, if it comes back down in the H pattern, it's going to take it right out, which it did. It went to 108.12. Now, 108.12 even takes you below the 110.72 previous double bottom low from the 30th of August, the daily chart of 2013, and the 110.72 low of the 6th of September. So in other words, there's no way. This started a brand new move, and that's peak A, and this is now peak B at 125.91. It says it could fail because it's a daily chart, and we might find that it was just an aberration, the news there. I don't care. The price is the price. The Chapman Wave methodology is the methodology. It would be really unusual to fail, but it has got to go from 123.51 to 125.92 to start leg C, and then it needs to pull back and make a modest new high. So I suspect it's not going to go much higher than 126.60, 126.30 to 126.90. Probably not even 127s. But it's the weekly chart that is the one that I'm looking at, because there is an alternate count here, because the Chapman Wave instant restart from March of a year ago, back 315, made a peak D of 2013, 104, and within 2 days made a new recovery high, and that's a potential instant restart. But it did give a perfect G, and then took a long time at 119.38, never took it out until that big spike 3 weeks ago, where all of a sudden it just took off and went right up to the 125s. So that says it could be an alternate count E, and a weekly chart, the tide of the weekly chart takes precedence over the daily, and the tide of the monthly chart takes precedence over the weekly and the daily. That means that you might eventually get a peak E in the monthly, and it doesn't matter what the counts are in the daily and the weekly, but they usually do work out to at least a D. But it's E in the monthly, and you've got that little dolphin look in the monthly MACD. Stochastic's fading badly. It's still at 86%. I say fading badly in that when it broke out and went above the 101.18 2008 high, that stochastic started to turn down, and it's been going lower. So there's a divergence, but the on-balance volume is good, relative strength is very poor, and the slow stochastic. And that says this move to the upside got to be monitored very carefully. It's great action, but technically you've got to monitor very carefully. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
How you doing, Basil? Hey, Basil, can I play devil's advocate here?
Please.
I'm trying to argue. If I'm hearing you correctly, you're saying we're still in the correction mode.
Yes.
I want to argue that we just started a new buy mode starting on Monday.
Okay, I could join you in that argument, but I have the other side as well. So we've got a break coming up, and I absolutely would like to hear what you've got to say, but I have to tell you, the VIX at the 14 area, the low 14s, that's a big positive. I don't know why the market is not up 40 points right now. I'll be back with Freeman straight off this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we are back. Dow's only up 3, S&P's down 40 cents, and let me just run these just quickly. IWM is right now, that's a Russell 2000 ETF, stopped right at the trend line resistance. Top is 128.58. It's trading at 119.44. The Qs stopped right at that resistance, that falling axe formation. Ho, ho, ho. And we've got Freeman on the line, and he's going to tell me why there's a chance we could be just starting a new bull phase. Correct, Freeman?
Yes, because of that move from Monday of the VIX dropping 15% up to today.
Yes.
And would you say that's a peak C failure there on the VIX?
It absolutely is the second peak C failure. Peak C minus was made at 21.48 on the 3rd of February. The last one did a peak D at 16.75 back in December the 18th. But the VIX is not the root. The root is the New York Stock Exchange futures. So this is the VIX is secondary, could even be called tertiary in a certain way, to other factors. So I don't always anticipate, because the weekly chart very often fails at a B or a C. When it does go to a D, that's pretty significant. It's gone to a D before. It did that back in May, I think it was last year. June of last year, it went to 21.91. So, but make it real simple. In the 14s, especially if it had to go to the 13s, you'd have to consider I would have to consider that it's buying pressure. No question about it. Next point.
Next point is, why wouldn't you say the Dow and the SPX are in leg A?
Okay, they are in leg A, but it's what I call the gray A. In fact, if you look at my Dow chart of my daily, for my daily call for my subscribers, I've actually printed it in gray. One of the reasons is when the price pulls back sharply in what I call the, in this particular instance, it's like the Grand Canyon, one of those cliffs. It just goes straight down with no trough until the bottom. Every day was a low bar from 16,505 to 16,046. That 460-point decline was sharp enough that I have to consider that any rally has to be called a counter-trend rally until it takes out closes above 16,505, and it really has to do that significantly for me not to call it a G, but either a new leg A or B or whatever it is. So absolutely it's A, but if you look back, you'll see that the last time we had that kind of move from 16,588 December the 31st to 16,256, that was only 300 points. The rally was very sharp for one day. It went to 16,505. Isn't that? Oh my, I love when we get the same number. 16,505. How can that be? 16,500. Yeah, 16,505 was the most recent peak F top. So what happened? It went to 16,505, pulls back, holds the 9-period moving average, has one more spike on the 21st of January to 16,520, and that was it. Those were gray letter A, gray letter B. And in that particular instance, the move up into about the 17th of January saw the MACD and slightly negative, just like it is now, and the stochastic rallying quite sharply. But the very big difference is going to be if the Dow takes out, and it really has to do it decisively, close above it, 60,405, the high of the 13th of this month. It really, if it closes powerfully above that, then I have no choice but to say, hey, V-shaped formation, good chance that we're going to try to double top. At this particular point, the weight of evidence says that so many charts made a peak D and an E. The Dow actually made an F in the dailies, and the weekly charts, the technicals of the weekly charts are weak. I'm saying to this market, I'm prepared to go long certain stocks. The weight of evidence has me mostly on the short side, and that's the way I want to play it for now. You proved me wrong. I'm quite prepared to go more to the long side, but at this particular point, I do believe that everything's pointing to this being part of a bounce. Now, is this A to B? This is now not the Chapman wave peaks and troughs. This is purely 16,505 to 16,046 in the Dow was the A to the B of that lightning rod Z-shaped pattern, and this is now the B to C retracement. And at some point we're going to make, and I've drawn that into the weekly chart. Let me just do that, and I'll show you if anybody's looking at Tiger TV. I drew it in a dashed line that says a measured move would take you down to about this 15,276 level. That's another 1,000 points. If there's going to be a failure this week, and the Dow, I would just say, make it simple. The Dow takes out yesterday's low of 60,046. I'd rather say if the Dow starts to trade under 16,000, there's just a really good chance we're going down to the 15,700s quite quickly. I'm making it as simple as possible. So,
thank you, Basil. Yeah.
So you're absolutely not wrong, because I've spent a lot of time last night. I spent a lot of time looking at the takeoff patterns, and if today by 4 o'clock, if there is another plus 60 or plus 80, those three candles, yesterday, the day before, and today, would say to me, uh-oh, wrong side, you've got to go long. But unless that happens, I think this is just a bounce, and it should start to retrace to the downside. So thanks for calling, Freeman. We'll know soon enough.
Thank you, Basil. I appreciate that. Thank you.
And I'll just make it simple. If the VIX starts to trade back in the 16s, this market's going lower again. So let's go to Larry in Cheyenne, Wyoming. Hi, Larry. How are you?
Yeah, hi, Basil. Thanks. Cheyenne.
Cheyenne, of course, yeah.
Yeah. I have a question about IBB target on the downside. It looks like it's giving it up a bit here today. And can I just ramble on my newbie analysis? And then
absolutely. I'd love to hear it, yes.
All right. So let's say the peak D holds from back in March 24. And the trend line on the shorter term, it went above it a little bit, but now it's wanting to come below it.
Correct.
So when I look at the weekly, when I do I use your technique, but if today was a C point and we do an ABC to D target, we get around 240. And it just so happens the 20-day moving average on the weekly is around 240. And also you got a high volume test low bar in February there also. And so I'm asking, and on the daily, if you a normal Fibonacci retracement from the low to the recent low to high on the daily would be 786 would be around 240. Does this factor into any of your thinking on a target? 240 keeps coming up.
I have a couple of things. I took it off. I had it just recently for myself, but I've taken it off. I have a Fibonacci extension to the downside, which says that if the IBB, which is trading at 261.47, it's only down 75 cents. It did pop up to 263.45. And if it takes out 250 at any point in the next 3 weeks, then there's a really good chance that the next level would be in the Fibonacci would be a 161.80 retracement, and that takes you to about 247. 247, if it even gets to 247, it's under the 9-period moving average in the weekly, and I think I would then look, and I'm probably going to find a way to do this. I know that Tom gets it in Bloomberg. I just haven't bothered to check it out. I will start looking in about another 3 days' time. In fact, by this weekend, I'll take the opportunity to start looking to see what the sales are in the mutual funds. My suspicion is if there is no new recovery high, if the 257 to 257 to 259-ish area is not hit in the IBB, the NASDAQ iShares Biotechnology ETF, by Friday this week, but instead we start to fail here, and the 120-minute chart was acting very well up until the close yesterday, and today It popped up to 263.45, holding the 9-period moving average. It's in leg B, but this could easily be a retracement failure. Stochastics at 91%. That's very good. But if it starts to fail and goes down under 80% in the next 2 days, that'll give you another H pattern. So I'm watching this very closely. All I can say is that those are the parameters I'd be watching. A break on the upside of, say, 261.59. So a break of I would say 267. It goes to 267. That's very good action. And although it could still turn around, there are just enough biotechs to maybe push it a little bit higher. I'm looking at this, and I'm starting to see Biogen IDEC is one of the stocks there. It's in leg D. It needed that leg D. It made a peak C1, C2, C3 in the 353 area. Now it's in leg D, but the stochastic's only at 66. The MACD is turning up, but the MACD in the weekly chart is still very strong, even though the stochastic's starting to fail in the weekly chart, but the prices moved higher. So they're just a couple. Amgen did very nicely. So I'm watching them individually. Amgen has gone to a potential leg E, but it even could be a C in the daily, but it's absolutely a new leg A, B, C. This is a new leg D in the weekly. So you can see that regardless of how I look at it, I try to be as objective as possible. I try to allow some of these stocks to complete their moves to the upside. And then I try to see which are the ones that are the weakest within the sectors, and those ones that are weak need to be in the top 5 or 6. If all top 4 or 5 are very, very strong, Regeneron, I believe, is another one in the top 3 or 4. Yeah, Regeneron is just stuck. I think it's making a peak F, maybe even a hat-trick top, even though it's one of the great companies. Yes.
Basil, quick question. When you're, that was my second part. The institutional distribution pattern. If you see signs of it, how do you after your years of experience decide? It's totally in distribution up here, and therefore the people on margin, the gaps that could form. Do you have any way of interpolating where the gaps might form when there's just no buyers and the institutions have gotten out? How do you do that, or do you do that?
I've been doing it now since we got that 275.40 top with a 274 round number high. All-time high, all-time round number with the same within 2 days. That's what I call a silent candle. That on the 26th, after it made 275.40 high, it had a high of 274 round number high. At any point, if it takes out 274, I have to consider that there are new fresh buyers coming in and it could go higher. But the fact that on every rally that we've had, except for yesterday, the IBB, which before would have been the leader of the pack, and when we'd be talking now, and I'd be saying to you, oh my goodness, IBB is at new highs. It's telling us that the fund managers who grabbed this sector every time there was a pullback for the past 2 years and were absolutely rewarded spectacularly. They tried to do it a few times. That's why it held so nicely after the top. 26, the high was 24. 27.30, 273.66 on the 27th. 273.02 on the 28th. And then plop. And it's made lower lows and lower highs. This is the first decent bounce of 3 days. So I'm watching this really closely, and I can tell you this. My reading is that the technicals are fading very quickly in the IBB. I'm watching the weekly very closely, and I've got suspicions that if we look at next week, we will start to find that there has been some fund selling for the very first time going into this high and coming out of this high. So in the month of February, late February into March, I would not be surprised if we start to see the selling. Now, the thing to remember...
And Basil, question, that's why you keep going back at it to re-enter, because you're anticipating at some point gaps, no buyers with gaps down, right? That's what it is.
Well, it doesn't have to gap. It just needs to make lower lows and lower highs. Absolutely. Okay. But the most important thing is it would be leading. It wouldn't be 14 points off its all-time high right now. Days young, anything can happen. But it wouldn't be. It probably would be right now at least at 272, kind of just underneath the all-time high, if not at all-time highs. That's number one. Number two is that this sector has gone parabolic in the monthly chart. It could actually go a little higher, but basically it's gone way above my 261% extension that I look at where I start to get cautious. So we'll see. You know, the day is young. All I can say is I think it's going to be going lower, and it's going to be a struggle to really break into the under 250. But once it does that, it'll accelerate down.
Nice.
Larry, I hope that helps you.
A lot. Thank you.
Thank you very much. Folks, we'll be right back. Guys, down.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technisians Hour. My pleasure to be here Monday through Friday, but I'm also going to have the pleasure of doing Larry's show straight off this. Hope Larry's doing well. And I'm going to be back here in just a few minutes. So as we do this, for those of you who listen to this hour, but you aren't able to listen for the next hour, let me just do a real couple of quick things. Let me get rid of this 5-minute E-mini chart there. I'm not trading it right this moment, so I can get rid of it. Look, the home builders, HGX, this whole thing comes out today. Oh, things are much better. Oops. Things are much better in the home builders. Well, first of all, you're looking at a chart of high-grade copper. Made a new low today, a monthly new low, a weekly new low, a daily new low. Not good. It looks to me like it's going to 2.53. That's the 200-period exponential moving average. Be careful. That's telling me about the economies of the world. But this is even more important. Look, comes out great news. KBH Homes, a whole big thing about it, great news, blah, blah, blah. Let me tell you something. Let me just try to get this and stop talking for a second. There it is. This is the home building chart. Goes to a leg F. I have to call this an F. I'm not sure what on earth I can do here. ABC has to be a D. Goes to an E. Even if that's not 198.06, 198.33 goes higher, so that's an E and that's an F. Got to be real careful in the home builders. Now look at this, the peak D in the weekly, and this is what I'm going to go through tomorrow night. I want to explain to you why, how, and you can use these particular techniques. Are you right 100% of the time? Nobody can be, but you do your absolute best because you've got the best tools. Look at this. Home builders have not crossed negative yet, but are really, really building. HGX, the Philadelphia Housing Sector Index. Today, great news. It pops up from an open of 204 to 208.16. It's traveling right now in the 205.25 area. That's not good. Look at this, KBH. KBH goes, bam, up. All of a sudden, it pulls back, and the high of the day was 1944. Yesterday was traveling in the 1771 area. Big move. But it's got an E in the weekly chart, and I'm going to be watching this very closely because the technicals are not that great. Hey, wait a minute. How about just talking about the different aspects? I wanted to just tell you, the VIX right now is moving up. No, it's down. It's down 10 cents at 1442. I'm just going to make it real easy. If by the end of the day, the volatility index has moved up into the 1460s to 1470s, that's going to say, be a little careful here because we could get the H pattern in the Dow and the S&P that says, watch out because it closed below 16,278. The 9-period moving average says, single leg A up, failure pattern, got to be careful. If it just holds steady today and then spikes up tomorrow, I'm quite prepared if there's any day this week that has another 80 points to the upside, I'm quite prepared to say, hey, that's one of the reasons why we went long on a particular stock today, which is up really nicely from our entry point, 1%, I think. But that's not the issue. The issue is to find something with substance, and this could be a counter-trend move. This could be a stock that's been beaten down, is now just saying, hey, I've had enough. I just want to rally, or it could just be a pop-up. I don't know. And the shorts so far are acting very well. That's all I can do, and I'm going to say this, make it as clear as I can. A move in the Dow, which is at 60,333, that takes out the 63.90s high. Even if it doesn't close there, if it even gets there, I'm impressed. I'm impressed enough to say, hey, there's inner strength. At this particular, I got to take that away. We're not short anymore. So let's just take that out. We could get short very quickly. And I'm just looking at this and saying, those are my parameters. If the VIX starts to drop and goes under 14, this market is going higher. I'm on the cusp. I'm prepared to let the market say, you show me. And I'll be right back in just a few minutes. I'll be back to do Larry's show.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.